The Fed wants you to believe that inflation is going back down to 2%. Donald Trump wants you to believe that he's already kicked inflation's ass and it's gone. No, no, no. Gold is telling you that inflation is not only here to stay, but it's going to get a lot worse. And as more people recognize how much worse it's going to get, they're going to be buying gold and silver. Who knows? Silver could be over $50 when it opens on Monday if we get a $2 rally, which, we could easily do. Who knows? Gold could be above $3,900. It could be above $4,000. I mean, I think it's headed there. Buy yourself some gold, buy some silver. This may be the last weekend where you can buy silver below $50 and gold below $4,000. No guarantees. Maybe you'll get lucky and it'll go down this week. I don't know. I wouldn't bet on it. I think the trend is going to continue. Gold and silver are going up for a reason, and I see no reason for that to stop. Bye for now.
Gold's relentless rise toward the $4,000 mark is sending a clear signal that inflation is far from under control. Despite official narratives suggesting price pressures are easing, the precious metals market continues to reflect deep structural imbalances in the global economy. Gold and silver are responding not to short-term speculation, but to the erosion of currency value and the loss of faith in monetary authorities. Central banks and informed investors alike are accumulating metals as a form of insurance against the next wave of inflation and monetary debasement. PeterSchiff, renowned economist and founder of Euro-Pacific Asset Management, warns that gold's movement is not just about price. It's a reflection of the truth policymakers refuse to acknowledge. He argues that both political parties and central banks are underestimating the persistence of inflation, while investors who continue to hold faith in fiat or digital substitutes, such as Bitcoin, are missing the real hedge. Schiff highlights how gold's steady climb, coupled with silver's strength near $50, confirms that tangible assets are reasserting their monetary role as confidence in paper promises fades. As this dynamic accelerates, the long-term outlook favors tangible value over speculative gains. Schiff believes that those waiting for another dip risk being left behind as accumulation builds and institutional demand deepens. The message is clear. Gold and silver are leading indicators of the next phase of this monetary shift. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
And that includes a big sell-off. We had a $2 an ounce sell-off intraday yesterday on Yom Kippur, and I think a lot of that happened with low volume because silver rallied early in the morning up above 48 and then immediately got hammered down to 46, $2 drop in a matter of a few hours. Obviously, they were running stops. What the stops are is when futures traders, they try to trade, they're all levered up, and they put sell orders in below the market because if the momentum turns, they want to cut their losses. Well, I think in the thin trading with a lot of Jewish people not at work, they were able to take advantage of that and flush a lot of speculators out. That also hit the mining stocks, created a great buying opportunity, I think, in the mining stocks, which also on the week, the GDX was up 3.2% and the GDXJ up 3.7%, but not nearly as much as you would have thought given the big moves in gold and silver. And I think a lot of that had to do with the shakeout from Thursday. And I think some people were a little shy today to even buy these stocks, which I think is setting them up for another big rally. In fact, I think that we can move above 4,000 in gold next week because it's only like $110 away. I mean, that's nothing. And silver is less than $2 away from 50. And this may be the last weekend that you can buy silver below 50. We'll see. I mean, I've been telling everybody on the Friday market wrap not to wait till Monday. Buy over the weekend. And if you would have followed my advice last week, and if you bought on Friday night, if you bought any time on Saturday, if you bought any time on Sunday morning, Sunday afternoon, you got basically unchanged. But if you waited till Sunday night or Monday morning, gold was up $70, I think, on the Monday. Silver was up all over $1. We had a big move. Most of the move happened. But then, we continue to build on that. But I think the same thing is probably going to happen again. I mean, there's no guarantee. But I think a lot of buyers come out on Sunday. A lot of foreign buying. Maybe the central banks, they start the week and they buy some gold. So I would expect another big move. And I would just buy. Again, hopefully you bought last weekend or the weekend before, right? As I've been telling you. Sales have been picking up at Schiff Gold. They're about double what they had been, but they're still not anywhere near where they should be given what's happening. Now, I think one of the reasons that we had a muted reaction, I think, in the mining stocks this week was we finally had a big rally in cryptocurrencies. Bitcoin was up about 12%. We almost hit a new high in Bitcoin. In fact, the Bitcoin ETFs, the exchange-traded ETFs, hit new highs. But Bitcoin itself didn't, because when it hit its high of just below 125,000, those exchanges were not trading. But we came close, not quite there, but maybe we'll get up there. As I'm recording this, Bitcoin is 122,600. So it's pulled off a bit from its intraday high. But I think maybe some people sold some mining stocks and maybe, went into Bitcoin stocks. I think that's going to be a mistake. In fact, I think the fact that you have so much profit taking in gold stocks this week, despite the record highs, right? Record high price of gold, 14-year high in silver. And rather than rushing in and buying stocks, you had a lot of people cashing out and saying, well, let me take my chips off the table, let me sell. That is very healthy for a bull market to have profit taking, to not see a lot of speculators rushing in to buy the highs, but people are being cautious. They're paring back their positions. They're not rushing in to buy. All that is a sign that these are early days in this bull market. We still have a long way to go. But, the sell-off that we had all basically took place on one day. And even though silver was way down, it recovered. It was still negative on the day. And some of the gold stocks that were down 3 or 4 or 5% ended up positive on Thursday. Now, most of them finished negative, but way, way off the lows. So the money to buy the dip came rushing in. I mean, it used to be when gold went down, it could go down for weeks. And when gold stocks went down, they didn't just go down, they got killed. But there's now so much money that wants to come into this market that the dips are shallow and they're over very quickly, which is why I've been telling all the Schiff Gold customers, don't even bother waiting. I mean, yeah, if you waited for a dip, you could have got lucky and got one on Yom Kippur, but it didn't last long. It was a short sale, and it still didn't even get back down to where you could have bought it the week before. It just crashed down to 46, right? The low 46s, and now we're back above 48. But, there should be some resistance at 50, I would imagine, because we have this huge double top at 50. But who knows? I mean, I wouldn't be surprised if we blow through 50. But I do think that once silver gets above 50 and holds above 50, Katie, bar the door. It's going to be a big rally. And gold's going to rally too, right? It's not like gold's not going to rally when silver's rallying. It's going to rally. I just think silver's probably going to rally more. That's why I've been, really trying to push people to get some silver, especially if they haven't had any, because I still think it's very cheap in relation to gold, which is also cheap in relation to all the dollars that we've printed. But not just all the dollars that we've printed, but all the dollars that we're going to print. That is the key. Gold is telling you that there's a lot of inflation in the pipeline, right? The Fed wants you to believe that inflation is going back down to 2%. Donald Trump wants you to believe that he's already, kicked inflation's ass and it's gone. No. Gold is telling you that inflation is not only here to stay, but it's going to get a lot worse. And as more people recognize how much worse it's going to get, they're going to be buying gold and silver. And they're not going to be buying these cryptos. I mean, they're buying them now, but ultimately, they're not going to be buying them. The real money that thinks you've got a inflation hedge in Bitcoin is going to realize that if they really want an inflation hedge, they got to buy actual gold, actual silver. So gold was up about, 3% on the week. So in terms of gold, the Dow was down. In fact, we just ended the third quarter a couple of days ago, earlier this week. I think Tuesday was the last day of the quarter? Or Monday? No, Tuesday. Gold was up 17% on the quarter. 17%. So the Dow had a negative quarter priced in gold. Silver was up 29%, but let's just price it in gold rather than silver. On the quarter, I'll just have to do it by memory. The numbers aren't going to be exactly accurate. I thought I wrote these numbers down, but I don't see them. But the Dow is worth 12 ounces of gold right now. It was worth, I think, 17 ounces of gold at the end of last year. So we're down about, 27%? Again, 27% on the year. 27% priced in gold. If you go back 2 full years, from the end of Q3 2023 to the end of Q3 2025, those 2 years, the price of gold actually doubled over those 2 years. Now, yes, the Dow Jones went up, but it didn't double. So over the past 2 years, the Dow is down 33%.
Gold continues to expose the illusion of wealth created by fiat inflation. While headlines celebrate record highs in the Dow Jones, the truth, measured in real money, tells a very different story. In nominal terms, equities appear to rise, but when priced in gold, the Dow is in a long-term bear market, down over 70% in the past 25 years. This decline is not due to collapsing stock prices, but the steady erosion of the dollar's purchasing power. Gold, the accurate measure of value, has held its ground while fiat currencies have continuously lost credibility through overprinting and debt expansion. As central banks quietly exit U.S. treasuries and reposition into gold, the broader market is beginning to understand that paper wealth is an illusion built on inflationary policies. Even Wall Street, once dismissive of precious metals, is now recognizing that the forces driving gold higher, monetary debasement and fiscal excess, are only intensifying. The shift of both institutional and public capital into tangible assets marks a more profound transformation in the global financial order. What appears to be economic strength in nominal dollars is, in truth, the reflection of monetary decay. Real wealth today is being preserved in tangible form, not in fiat illusions. Let's get back to the interview.
The central banks know that they're going to get clobbered if they get caught holding the bag on a bunch of treasuries and U.S. dollars. And so they're moving into gold. And the public is now moving. I've been saying this. Wall Street is finally woken up. And for the first time in my career, I'm not the only one on Wall Street recommending gold and silver. And the fact that now we're seeing money flowing into the miners is a vote of confidence that gold prices aren't coming down. I mean, the reason that Wall Street was reluctant to embrace the miners is because they always expected the gold price to go down. They never understood why it was going up, so they assumed it was just going to come down. But they've now come to the conclusion, after gold has gone up for so many years, that it's not going to go down, that it's going up for a reason. And the reasons it's going up are not going away. In fact, the reasons are going to get stronger. So the rally is going to get stronger. When they talk about the stock market, right, because the Dow Jones hit a record high today, closed above 47,000. And that's what Americans are going to hear, the big headline, the Dow's at 47,000. We're rich, right? I mean, because people remember in the year 2000, the Dow was 10,000. Now it's almost 5 times that. Hey, the Dow is up. But in terms of real money, gold, it's down. Right? On the quarter, the Dow Jones is down 10% priced in gold. It's not up. It's down 10% if you price it in gold. If you go for the year to date, 2025, the first 3 quarters, the Dow is down 27%. It's in a full-fledged bear market. That's a horrible return. Negative 27%. It's positive in dollars, right? Because gold is up 40 something percent on the year, right? But the Dow is down. in terms of gold. Over the past 2 years, because gold has doubled from the end of Q3 2023 till the end of Q3 2025, which was a few days ago, the price of gold more than doubled, just barely more than doubled. Yes, the Dow Jones went up a lot over those 2 years, but it didn't double. So in terms of gold, the Dow Jones lost a third of its value. A third of its value. Now, gold is money, right? Once upon a time, we used gold. You know, if you go to Schiff Gold and you buy some 1 ounce gold coins, you could buy U.S. coins that were minted before 1933. If you buy circulated, U.S. $20 gold coins, they're not that much higher than buying, the new ones. If you buy MS-65, you buy an uncirculated, rare date coin, you're going to pay a lot of money because there's a big premium there because it's got a collector value. But if you just buy a beat up coin that's circulated and, you're not going to pay that much more than buying, a Maple Leaf or a Cougaram. But that's real money. When somebody bought the Dow Jones in the 1920s, they paid gold dollars to buy it, right? Because 1933 is when Roosevelt confiscated all the coins or told everybody to turn them in, and they melted them down. But before that, Americans were walking around with gold coins in their pocket. And the Dow Jones, at its peak in 1929, you needed 19 ounces of gold, right? So about 20, because each $20 coin, right, had about an ounce, not quite. So if you had 20 gold coins, you could buy the Dow Jones at its peak in 1929. That was obviously very expensive because the market then crashed. And in 1933, because gold went up to $35 an ounce, you could have bought the whole Dow Jones with one of those coins, just one, right? If you still had it, right? But today, you only need 12 ounces of gold to buy the Dow Jones. So if you have basically 13 of those coins, forgetting about the collector value, the melt value of 13 $20 gold coins will buy you the Dow Jones today, right? Whereas you needed 20 of those coins to buy the Dow Jones 96 years ago. So what does that show you, right? Because people think, oh, the Dow's 50,000 now, 47,000, and it was 360. See how much richer we are because now the Dow is 50,000. It's meaningless when you think about, but back then gold was $20. And now it's $3,900, right? Gold tells the truth. The government lies, right? Gold doesn't change. It is consistent. It's the purchasing power of fiat money that doesn't just change, it evaporates. And one of the reasons that the governments love to create inflation, other than the fact that they benefit from it because they spend the money they're printing, but it also creates the illusion. People think times are good because the numbers get bigger. The GDP goes up, right? Oh, I'm living in $1 million house. Right, but that $1 million house may be less valuable than the $100,000 house you used to live in because you actually can buy that house today with less gold than you bought it back then when it was only $100,000, right? So the houses aren't really getting more expensive, right? It's the dollars that are getting less valuable. But if you price your house in gold, you can see what's happening. And you got to price the stock market in gold. And I think this bear market is going to continue. Stocks will continue to go up in fiat currency, but they will continue to go down in real money. That's why you got to own real money. You don't have to buy the Dow. Just hold gold and you're doing better than the Dow. You're not getting enough dividends on your stocks to make up for what you're losing in real depreciation. The bear market has been even bigger because in 2001, when the Dow was at 10,000 and gold was around 250, the Dow was worth 40 ounces of gold. Today, with the Dow almost at 50,000, it's only worth 12 ounces of gold. That is a 70% decline.
The real story isn't about the Dow hitting new nominal highs. It's about the erosion of purchasing power that fiat money hides. When measured in gold, the Dow has been in a relentless bear market for decades. The illusion of wealth grows with each dollar printed, yet the reality is one of silent confiscation through inflation. Gold remains the accurate barometer of value, immune to manipulation, consistent through centuries, and indifferent to political cycles. Those who measure their wealth in real money understand that this quiet transfer of value is already well underway. The future belongs to those who protect their savings with tangible assets, not inflated promises. Gold reveals the truth that paper tries to conceal, and it's a truth that is becoming increasingly impossible to ignore. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.